And this is an issue which again, as time progresses, the courts will have to handle. And I'm sure the courts generally are liberal in looking at these things. Ground level, definitely superintendents are going to reject credits if you are not registered, saying that you have missed the 6-month bus. You will have to go to the higher forums and say that, look, I always believed my activity was non-taxable. Because most of these examples are situations where the person is ignorant of his liability. And suddenly there is some enforcement or some investigation, and therefore that person comes to know that, look, I was liable. And at that time comes the question of quantification. So at that stage, maybe there will be some more difficulty now. Earlier courts have been liberal, but with the 6-month criteria, you might face some difficulties at some point of time. So we are told, provider of service located in the taxable territory, but shall not include a service specified in section 66D of the Finance Act. This is basically the negative list of services. So there is a list of 17 services which the service tax law says that these are services which are either priority services or state level taxation. So I cannot touch it. For example, entertainment services. Entertainment duty, as you know, is a state level subject. So the center cannot tax it. If the center cannot tax it, the center will not give you the SENVAT. Go back to our first slide which said, if my output is taxable, I will get the credit. So anything which is in the negative list, the center cannot tax it. Because the center cannot tax it, it will not give you a refund. And therefore we are told, output service shall not include a service which is specified in the negative list. Similarly, we are told, output service shall not include a service where the whole of service tax is liable to be paid by the service recipient. Now, as you know, the next topic which we are also going to talk about today is the reverse charge mechanism. We have a very weird type of a concept under the service tax law, wherein in certain cases, instead of the service provider, the service receiver is required to pay the tax, including a very common service which is a legal consultancy service. So as an advocate is not required to pay the service tax. The business entity paying the advocate the fees goes ahead and pays the service tax. The question at this point tries to address this issue. The question which comes is, can an advocate say that, look, I am not paying the tax, my client is paying the tax, but essentially my advocate service, the legal consultancy service, is a taxable service which is bearing a service tax. If it is bearing a service tax, if as an advocate I have taken a property on rent and my landlord charges me service tax, I want that money back. So I want to have the cake as well as eat it. To avoid that type of a disconnecting situation, we are told that the output service shall not include situations where the whole of tax is paid by the service recipient. So that advocate does not become an output service provider only. Because he does not become an output service provider, he cannot encash the SENVAT credit or the input services like telephone bills or insurance, etc. He can't go ahead and do that. Anyways, it would have been very minuscule, but the government has taken care that people don't misuse it, so they've tried to put it as an exception over here. Exempted goods, again from a manufacturer's perspective, so we will not go into that in detail. We now go to exempted service. So we are told output service is the entry point into my SENVAT register. If I am not an output service provider, I cannot enter the SENVAT credit scheme at all. Assuming I enter the SENVAT credit scheme, as a person I might have multiple activities. Some activities may be taxable, some activities may be exempted. And that's where we have this definition of exempt service, wherein we are told exempt service means any service where the service tax is exempted through a notification. So for example, you have construction of a government building. There's a mega exemption notification which says that in general construction is taxable. But if you construct a government building because it is for the government, there's an exemption. So if there is an exemption through a notification, then that becomes a part of exempted service. Even though it is an output service, it becomes exempted service and therefore corresponding credit will not be available to you. Service on which no tax is leviable under section 66B. So again we go to the negative list item, or a taxable service where there is a notification which says that no input service credit will be available. So there are various abatements, various services like goods transport service, there is an abatement, rent a cab, there is an abatement. So various services, there is an abatement. In case of abatement, there might be a condition that input service credit will not be allowed. If there is such a condition, it becomes an exempted service. If there is no such condition, it does not become an exempted service. We are specifically told an export of service will not be treated as an exempted service. It will be treated as a taxable service, even though you are not going to pay the service tax on that transaction. So this is just a summary of whatever you. Yes.
Is available.
Yeah. So abatement depends on the type of the abatement. There are certain abatements. Like for example, a builder is entitled for an abatement and he is required to pay service tax on 25% or 30% value. For him, the credit of input service is available because there is a table which is given in the abatement notification which says that there is no condition that input service credit should not be claimed. So if you are a sort of a builder, you will still get credit despite paying an abated service tax. But if you are a rent-a-cab operator, there the condition is input service tax credit should not have been availed. So what you need to do is all the abatements come under a notification called notification 26, wherein there is a table given. And in that you have to look at the input service column, and depending on the input service column, you will take a call whether the credit is available to you or not available. On each specific case, your answer will change.
So one very bigger
Sure.
regarding impact on capital goods.
Yes.
As per Rule 47, should first avail that and then utilize. But that capital on sales, impact on capital goods, I can utilize only 50% in the first year and 50% in subsequent year. Does it mean that I should avail full 100% and then utilize?
No, your availment is staggered in 50-50. Rule 47 does not apply to capital goods. Rule 47 basically lays down the limits or the time limits for availing of the credit. The 6-month time limit does not apply to capital goods. And when I go to that 6-month time limit in the next 2 slides, I'll be talking about it. For inputs and input services, the 6-month time limit applies. For capital goods, there is no 6-month time limit. So these are some terms which we needed to understand. Inputs, input services, capital goods. Output service, exempted service. 5 important terms which we keep on floating around in our minds. Broadly, I think we are aware of those terms. This is the format of my passbook. Opening, everybody is aware of it. It comes from a ST3 extract only. Questions which keep on coming up is what can be availed as credit? Then the credit is available of specified duties and taxes. As far as the service provider is concerned, please note that you can claim CVD credit of the consumables. You cannot claim the credit of basic custom duty. You cannot claim the credit of special additional duty if you are looking from the inputs perspective. Otherwise, I think some of these are very simplistic points. And that takes me straight to the time when the credit has to be availed. And this is an important amendment which has been brought in this budget. So I'll spend a few minutes on this slide. The law says that you should claim the credit within a reasonable time. So what they have done is, earlier there was only the first point of claim of credit. Now they have specified the first point when the credit is available to you, and also the maximum time within which you should claim the credit. So we'll take them up one by one. As far as inputs is concerned, the law says you can claim the credit immediately on receipt of goods in the factory. The moment you receive the goods in the factory, you can claim the credit. It is not necessary that you should use it for your final production. It may be used in the production 3 months down the line, 6 months down the line. So long as it is intended to be used for final product, you can claim the credit. Now we are told the maximum time within which you should claim the credit is 6 months from the date of the invoice. On input side, we are all now very clear of the difference between inputs and input services. Inputs basically means goods on which excise duty credit is sought. Input service is service on which service tax credit is sought to be claimed. On the input side, please note there is no criteria for payment. You may not make the payment to the vendor. You would still be eligible for credit. When it comes to input services, things will change. So let's go to input services and then we'll come to capital goods because that's the secondary thing. As far as input service is concerned, a service provider typically will claim input service in 3 different situations. One is a normal case like a telephone company charging me service tax. which I would say is normal situation, full charge by normal situation. Second situation is reverse charge mechanism cases. Cases like advocates, where I have incurred an expense of advocate, I have paid the service tax myself, but it is still my expense. As a commission agent, advocate's payment is still my expense. So, because it is my expense, the legal consultancy becomes an input service for me, and therefore I am eligible for credit. So, input service is where full reverse charge is applicable. This is the second circumstance. And the third circumstance is input service where partial reverse charge is applicable. For example, a manpower supplier, a security service provider, where there is a sharing of tax. Security service provider, we are told 25% paid by the service provider, 75% paid by the service recipient. Okay, so partial reverse charge mechanism. So these three circumstances, and this is very confusing. In each of these three cases, the timelines for credit keep on changing. So that's why we have three different lines. Input service is normal. We are told you can claim the credit immediately on receipt of invoice from the service provider. Rule 4A invoice, the date you receive the invoice, you claim the credit. And we are also told that you cannot claim the credit from 6 months from the date of invoice. So within 6 months you should claim. After 6 months from the date of the invoice, you cannot claim the credit. So there's a band. If the invoice date is, let's say, 10th of October, the earliest date you can claim the credit is 10th of October. The latest date you can claim the credit is the 9th of April. Within this 6 month band, you can claim the credit. Am I clear with you? As far as input services of full reverse charge is concerned, we are told that the moment you make the payment to the government, see, in full reverse charge there will be two things. One is you pay to the vendor, okay, so you pay to the advocate, and second payment is the tax payment which you make to the government in a challan. So the government says the day you make me the payment through a challan, I don't care about the payment to the vendor. You might have paid the advocate today, you might pay advocate 2 months down the line, forget it. The day you made the payment of challan, based on the payment of the challan, you can claim the credit within 6 months from the date of the challan. So your band here starts from the date of the challan and extends up to 6 months from the date of the challan. Am I clear of this? Both these situations, are we clear of the differences between these two? Then I'll go to partial, which is very confusing. Partial, I'll just explain through an example. Let us say you have a security service provider who charges you 100 rupees in the invoice. So he is expected to pay 3 rupees himself. You are expected to pay 9 rupees from your own pocket to the government. He raises a bill of 100 plus 3, 103. I am for the time being ignoring education cess for simplicity. And you will pay 9 rupees of challan to the government. Till now what used to happen was this 9 rupees challan, based on the challan we used to claim the credit. The 3 rupees credit we used to claim based on the invoice. Now that doesn't work that way. We are told this 3 which is in the invoice has to be linked with the 9 which is paid in the challan, and the entire 12 rupees credit should be claimed at one point of time only. And that point of time is the point of time after you make the payment to the vendor. So only after you make the payment to the security agencies, you can claim the credit of 9 rupees plus 3 rupees. Till that time, even though you have paid the 9 rupees by way of a challan, you will have to park it separately. Now practically this is a nightmare, because you don't have one security bill and you don't have one challan. You have thousands of bills all aggregated into one Excel sheet and total single payment made. So if I have for a month paid a partial reverse charge of 50,000 rupees, I cannot automatically claim the credit of 50,000. I will have to break that 50,000 into different compartments. How much vendor payment made, how much vendor payment not made. So if out of 50,000, 40,000 I have made payment to the vendor, I will claim 40,000 right now. Balance 10,000 I will have to keep it separately. Next month again I have to carry it forward. And then again from that 10,000, if I have paid 3,000, claim 3,000 credit. Balance 7,000, again carry forward. So that's the complication which arises in this. And by the time you do all of this, you have an outer cap which says that you have to claim the credit within 6 months. So if you don't make the vendor the payment within 6 months, you might be stuck up with some annuity, some amount which might just get lapsed because of this 6-month criteria. So this is where you have 3 different rules: input service delay. One, normal situation, on invoice you can claim the credit. Second situation, full reverse charge, you can claim the credit or payment of challan. And in case of partial reverse charge, tag both the things together and claim the credit based on payment made to the vendor. Am I clear of this? Now we bring in that joker of 3 months. We are also told that if you are claiming credit of input services, you need to make sure that the payment is made to the vendor within a period of 3 months. And if the payment is not made within a period of 3 months, in that case you have to reverse the credit. Okay? So what happens is, today I receive a bill from a client, from a vendor, I claim the credit today. I don't need to make payment today. I can make payment within the next 3 months, no problems. But if within the next 3 months the payment is not made, at the end of the 3rd month, I have to reverse that credit. And then there's a rule which says that if the credit is reversed, you can claim back the credit when you actually make the payment. And this is where there was one important issue which was coming up. Let us say, today I receive a bill from a service provider. I claim the credit today. I don't pay him within 6 months, I pay him on the 7th month. What happens is the question which used to come. First day I have received the bill, I don't know whether I am going to pay in the next few months or not, so I claim the credit today. I was eligible for the credit, it is correct. 3 months are over, the rule says you not paid to the person within 3 months, please reverse the credit. So first I claimed plus 100, then I did a minus 100 as a reversal. Now in the 7th month when I make the payment, can I now claim a recredit and say that please, now I have made the payment, please allow me this plus 100 extra once again. That plus 100 minus 100 has knocked off each other. I claimed the credit, I already reversed the credit, so effectively there was no credit. Now I am claiming the credit. Have I missed the bus because there is a 6-month timeline? That is a question which was floating around. A lot of controversy was there. I always believed that you can claim it in the 7th month because the time limit of 6 months applies to the first claim of credit and not to a second claim of credit. This is a second claim of credit for the same transaction. The whole idea of 6 months is to bring in discipline, because at some stage you want to bring something like J1, J2 here. If you want to bring J1, J2 here, you can understand somebody claiming 3-year-old credit. Like just a few months back we had taken an exercise wherein an entity claimed 7 crores of credit for the last 4 years at one go. Now naturally 4 years invoices, if he is going to feed in J1 today, you can imagine the chaos which is going to be created. So to bring that type of a discipline, for the first time credit we are told that 6-month criteria will apply. Just a week ago a circular also been issued to this effect, that the 6-month time limit applies only to the first time credit, not to the recredit claimed based on the reversal made earlier. So there are other conditions also which says that for capital goods you cannot claim depreciation under the Income Tax Act. And coming back to the question which was being raised, we skipped capital gains, the capital goods. As far as capital goods is concerned, we are told you will claim 50% credit in the first year, in the year of installation, 50% in the second year. There is no outer time limit. The 6-month criteria does not apply to capital goods at all. It applies only to inputs and input services. Because capital goods are to be used in a very specific manner on a long-term basis, there are various rules which do not apply to capital goods. So this basically is your, you can use the closing balance as on a particular date, and you cannot use it for paying a reverse charge service tax, which is of course in the past there has been a lot of controversy. Now there is a very clear provision that if there is an accumulated Senate balance, you can use it for paying all your output service tax, whatever service tax is payable on your incomes. But if you do not have in a particular month an income on which service tax is payable, as far as reverse charge is concerned, you still continue to keep on paying that service tax. Various reasons why reversal of credits are required. I think couple of them I would like to highlight to this group. One is everybody keeps on claiming capital goods as credit. At the time of purchase of capital goods, everyone remembers कि excise duty उसके ऊपर है, लेना चाहिए credit, depreciation नहीं लेना चाहिए. लेकिन 3 साल के बाद, 4 साल के बाद जब वो capital goods scrap होता है या sale होता है, there is a requirement to reverse a proportionate credit. Every period, every quarter you can claim 2.5% credit balance credit has to be given back to the government whenever you sell or dispose of the capital goods, which many companies or many persons miss out that provision. So whenever you are analyzing the fixed asset schedule, you should not only look at the additions to look at the eligible credit, you should also look at the deletions and the scrapping to look at the reversals required on account of the scrapping of the capital goods. Same thing applies to inputs and other capital goods. The last one we have discussed, value of input service is not paid within 3 months. Then under Rule 4.7, the survey credit taken has to be reversed. Again, available as a recredit as and when the entire thing is being, or the amount is being paid. So these are the 3 cases where recredit of reversal of credit is allowed. Rule 4.7 itself says that the moment you make the payment to the vendor, the recredit would be allowed to you. And as we just discussed, there is now a clear clarification from the CBC itself that the time limit of 6 months does not apply to this recredit at all. Refunds I highlighted to you. In general, there is no provision for refund. There are only 2 or 3 specific situations of refund. One is a refund in case of an exporter. Accumulated credits attributable to exports can be claimed as a refund. And second is a very weird situation wherein you are in a zone where you are required to pay a partial service tax only. Let's say you are a works contractor and you are a partnership firm. So you are required to pay only 50% service tax. But you obtain services from a private limited company. So your input service tax, the charge of service tax is on 100%. Your output service tax is 50%. So if your profits are not big, you might end up in a situation that your input credit may be higher than your output credit. So this type of input credit accumulation is something which the government gives a refund under Rule 5B. So those are the 2 specific situations of refunds. I'll take 5 minutes on this part and then we'll go to partial reverse charge for 10 minutes and then we'll try to wind up the session. All of this we've said is the general rule. We've till now talked about 2 compartments. We've said that if my output is taxable, I get a credit. If my output is exempted, I don't get a credit. What happens to mixed people? Because most of the people in the world will be mixed people. A construction contractor will be doing a general commercial construction. He'll also be doing a government project. A commission agent might be selling agricultural products, non-agricultural products. Anybody would be doing trading, and today trading is a part of the negative list of services. So it is also treated as an exempted activity. So if you have a combination, how do you go about dealing with that combination? Unlike VAT law, which is very liberal, it just loses a 50% criteria under Rule 53.6. If your turnover of sale is more than turnover of services, you get full credit, otherwise you go into one-to-one nexus. There is a very specific criteria. Unlike that, under the service tax law, there is an elaborate mechanism to deal with this. They have identified 3 different methods to deal with this. First is they say you maintain separate records, separate books of accounts, separate records to identify what all credits were used for taxable activity and claim credit only of that much. Don't claim credit of items which went into exempted service, which is Rule 6.2. Very difficult to follow. So that's where Rule 6.3 gives you a couple of options. The first option is you claim all the credit, but pay me 6% of your exempted value. So if you have 100 rupees of total services, out of which 80 rupees is taxable, 20 rupees is exempted, and you have X amount of SNVAT credit, claim the full SNVAT credit, no problem. But 20 rupees जो tax free value है आपका, exempted value है, वो exempted value का 6% you pay me as a penalty, something like a retention. That is a one option, which is payment of 6%. And the second option is a proportionate option. Use a rule of 3. In earlier assessments, we in the old BST Act, we used to do assessment on a proportionate basis. F form we cannot identify, do a proportionate calculation. GP ratio, take ratios, and do a proportionate calculation. Same way here, there is a detailed mechanism. There is a value of exempted service which you can calculate, value of taxable services, take the total of it, calculate a ratio and apply that ratio and pay me back that ratio every month. So these are the 2 broad options, Rule 6.2 and Rule 6.3. Rule 6.2 which requires you to pay 6% of the value of exempted output, and Rule 6.3 which requires you to pay a value which is in proportion to the value of exempted service to the value of total services. Practically what happens is Rule 6.3 results in lower valuation, lower outflow as compared to Rule 6.2, 6.3.1 and 6.3.2. But that 6% option is much convenient and easy, though it is costly. So depending on each case, you will have to take a position. The position which you take will have to apply for the entire financial year. If you are going for the proportionate method, there is a detailed letter and a documentation which has to be satisfied. So this is just one small example which we can take. Let's say the credit for a particular period is 2 lakhs. My output service is taxable value is 40 lakhs and exempted value is 60 lakhs. So one is out of that 2 lakhs I make 2 registers, taxable के लिए इतना, exempted के लिए इतना. Take only taxable calculations and claim the credit of that. Second is if I am not able to identify, claim full credit 2 lakhs, full credit, but pay 6% of exempted service. My exempted service here is 60 lakhs, so I have to pay 6% of 60 lakhs, which is 3,60,000. I am claiming 2 lakhs, I have to pay 3,60,000. Understand the pitfall of this method? It can sometimes lead to such absurd answers. Third is, yes.
Required to pay, or it can be adjusted from input?
It can be adjusted from input. It can be adjusted from input. The third one is proportionate method. So in this you claim 2 lakhs and pay back proportionately. Now my proportion here is 60 upon 100. Exempted value is 60, taxable value is 40, total is 100. So 60% of my output is exempted. So I claim 2 lakhs, pay back 60% of 2 lakhs, which is 1,20,000. Effectively I get net amount of 80,000, which is a fair calculation to go about it. And finally I can use a hybrid method for if I have inputs and input services as well, but that's a very complicated method which I don't want to take you through right now. Abatement, the question which you are asking, depending on the type of the abatement, you will have an answer whether you are eligible for credit or not eligible for credit. So depending on each item, your answers will keep on changing. So this slide I think we can then circulate to the members. I will not take too much time. I'll just take 5 minutes on reverse charge mechanism because we are already overshooting time. So rather than taking up that topic by itself, what I can do is we can have questions on the reverse charge mechanism and I'll just pick up those questions rather than take up the topic in the app.
So I wanted to know whether if you are reverse charge, if you are under 10 lakhs, do you have to apply for service tax or not?
If you are a recipient of service,
Provider of service.
you are a provider of service, then you are not required to apply for registration.
And if you are recipient for service, say you are say goods transport, you are a recipient of that service.
Yes.
So do you under reverse charge mechanism you are liable to pay tax on it? So are
Yes.
you supposed to take a service tax number though your sales is less than 10 lakhs?
Yes, you are required to do that, and this is the biggest pain area in reverse charge. That as far as the service provider is concerned, he will be eligible for 10 lakhs and in many cases he will not be covered under the provisions only, so he does not need to worry. But as far as the service recipient is concerned, irrespective of his turnover, even if he pays 1,000 rupees, of course 1,000 will fall within that 1,500 per trip, but if he pays 5,000 rupees to a goods transport agency and he is only a trader, he has no commission income, no service income, yet he is required to register, for him the 10 lakh limit does not apply, which is a big complication in itself.
Definition of business entity says that registered person, partnership firm and body corporate. Is it include the sole proprietorship?
Yes, a sole proprietor also is a business entity. Your question is on business entity.
But registered person, partnership firm and corporate, body corporate. But so sole proprietorship comes under registered person.
Any person carrying on business, because business entity includes. It doesn't say business entity means. So any person who is in business would be a business entity. Now for individuals, if your question is specifically on goods transport agency, for goods transport agency, business entity is not the right word to use. Business entity applies for works contracts, security, there are 7-8 items on the reverse charge mechanism. For other things, business entity is the word which you will question. But for transport services, there is a list of entities, specified entities which they have listed. And their individual is not listed. So if you are only talking from a transport, please, this is very confusing, I don't want to confuse you, but please note this well. If your question is only on transportation, For transportation, individuals is not a part of the specified list, and therefore he will not be covered. He is not required for reverse charge. But if he is paying some security or something else, maybe there is some different answer which we will have to look at. He is still a business entity.
Sunil, in case of mixed activity, like a trading activity in car showrooms like that, they are having authorized service station also, and they are selling the cars also.
Yes.
And there are certain services which are provided for both the purposes. So how it should be calculated for as far as input service
Yes,
tax?
this is a very important and an interesting question which brings out a practical issue. Authorized service stations, I think quite a lot of you must be aware of the business models, how they work. Now, for an authorized service station, they generally provide taxable services. They also enter into trading activities. Now, trading activities both of original cars and of spare parts. Now, as far as service tax law and Senved credit rules is concerned, trading is defined to be an exempted service. And the value of exempted service of trading is also defined. We are told calculate the gross profit in the trading activity. So if you are selling a spare part at 100 rupees and your corresponding purchase price is 75 rupees, you will take 25 rupees only as the value of exempted service. Compare that 25 rupees with my labor charges and the other commission incomes, and then calculate the ratio which I just showed in a few minutes before. I hope I am clear up to here. Right? Now the problem is not with the spare parts. Problem is with the motor cars. Because if in spare parts you will have 100 minus 75, 25 roughly like that. But in motor cars, you might end up in a situation of 100 minus 98. The profit margins in motor cars are not big, because most of it has to be passed away as discounts. The Senved credit rules also says that if you are trading in goods, the value of exempted service, which is the gross profit, cannot be less than 10% of the cost of goods sold. So, if you are having a situation of 98 and 100, you can't take 2 to compare with the commission income. You will have to take 10% of 98, which is 9.8, which is really not your GP. Yet, your value of exempted service will be 9.8, compare 9.8 with the commission income. And therefore, the eligible ratio falls down drastically. This is a big pain area which is existing in the authorized service station. I hope I am clear, or have I confused you?
Right now, sir, what we are doing, we are reducing the input of service tax paid on input services by 50% of what the...
No, that is an ad hoc method. When there is a prescribed mechanism under Rule 6.3, I am not sure whether any ad hoc method will be accepted by the tribunals.
Sir, everybody is exempted for 10 lakhs of service. So lawyers also exempted for 10 lakhs of service.
Lawyer is totally exempted, no?
No, exempted means what I am telling. If lawyer is exempted for 10 days, if he is giving bill for 1,000 for small entrepreneur, is it required to take the registration and pay that money? For 1,000, there is no service tax at all anybody.
Yeah. For the 10 lakhs limit, they have said any item which is covered in reverse charge is not a part of the 10 lakh limit. So, just because an advocate by himself is having less than 10 lakhs turnover will not enable the service recipient to claim the exemption. Okay, he would still be required to pay on that 1,000, 2,000, whatever. For the service recipient specifically, GTA में ये भी नहीं है. Lawyers के लिए specifically एक clause दिया गया है कि if the service recipient is also a very very small person having an annual turnover of less than 10 lakhs, then he will be exempted. But that's very rare, because if somebody is having an annual turnover of less than 10 lakhs, he doesn't need any consultant like us.
Hello, sir.
Yeah.
So clearing and forwarding agents, they are issuing 2 invoices. One is for the services on their service charges are charged. Another is for the reimbursement of the expenses, where transport charges also paid by them, and they are charging transport charge reimbursement. As a service issuer, it is a private limited company, whether reverse charge mechanism applicable or not.
A very good question which has been brought about, that what is the scope of reverse charge mechanism? does it apply only for direct payments made by me, or does it apply for payments made by me through an agent, like a clearing and forwarding agent? And you can have many examples. Today, rent-a-cab, employees will in their vouchers claim rent-a-cab bills. So whether only when the company has itself directly paid by check to a rent-a-cab agency, only those cases, or voucher के अंदर भी एक छान के ढूंढना पड़ेगा कि rent-a-cab का क्या expense है. The definition of SSE includes a person liable to pay tax and includes his agent. So there is a joint and several liability between the principal and an agent. So either your clearing and forwarding agent has to pay the tax, or you have to pay the tax. Either of you, it is between the two of you to decide who will pay the tax.
Clearing agent is giving invoice and taking the invoice from the transporter in the party's name only.
Then the party will pay the service tax. So it's either or. If the agent discharges the tax, the principal is absolved. If the principal discharges the tax, agent is absolved. But either of them has to pay the tax.
And sir, it is also extended in that way. They are making bills in
Such a way that the received expenses and non-received expenses.
Yeah, they are claiming
In case of received, they are not
so
paying.
because they say it's a reimbursement, they become an agent. You become the spender of the money. You become the recipient of the transport service, and therefore the primary liability exists on you to pay the reverse charge service tax. So you will have to call out those transport charges from that clearing forwarding bill, take it in your calculations and pay service tax on that. Same thing applies to your vouchers of rent-a-cab, which is very, very complicated. Clearing and forwarding is still easy to handle. Thank you very much. I think that's all we have time for. Thank you.
So an excellent talk on the subject. I think I just wanted one query regarding non-availability for a rent of car. A set off is not available. It's applied to even renting of buses. So means we are not available to take the credits. Okay, thank you. And is there any time limit for refund for the exporters who are not registered? Up to some period only we can claim this one.
Exporters refund basically is a topic in itself, but just to touch upon that issue, the refund claim has to be filed within a period of 1 year from the date of the export. That is a time limit which is there on the SSE. As far as the department is concerned, there is no time limit. Even after 5 years, if you get, you should be happy.
Thank you, sir. I think we'll just close. I'll request Dinesh to propose a hearty vote of thanks and make some announcements.
Of thanks. There are few announcements. 29th batch of coaching class for year 2014-15 will start from 2nd of December 2014. 39th RRC will be held at Kempinski Ambience Hotel, New Delhi from 14th February 2015 to 17th February 2015. Workshop on VAT and service tax jointly with BCA, CTC, MCTC and WRC will begin in the month of January. Now coming to the hearty vote of thanks, it is always great pleasure to present hearty vote of thanks to Mr. Sunil Gabawala. I must admit, he is the person because of whom at least myself practice service tax efficiently. That is because I use his book on service tax in day-to-day practice. He has really nicely dealt with the subject. We all must thank him for taking out time from his busy schedule. He has nicely dealt with the subject by beginning with the fundamental differences between sales tax and service tax. He dealt with the nexus theory. He also dealt with the passbook basic concepts and time limit for claiming set-offs, SENVAT credit, then relevant definitions, time for availment of SENVAT credit, reversal of SENVAT credit, etc. Let us thank him with loud applause.